Hey guys, Mike here. So I don't know if you noticed, but Arkk has been moving up right over the last couple of months and kind of just trading in this range, okay? And so I want to show you why that happened and what is happening, because you can take this and apply it to the stocks you own, the ETFs you own, to actually look and see, are we close to a bottom? Because this is something you're going to see today that actually happens before a bottom happens. And there's actually a 50-50 coin flip in this, which I'm going to go over with you in this video to show you what could happen here, okay? And so it's not by accident that Arkk actually turned around and is up pretty big off its low. And even as the rest of the market sold off, it continues to rebound. But you know, we'll get into that. Now, as far as what happened today, obviously more macro data came out. Shockingly, it was bad. The market sold off, but don't worry. The Fed marched their soldiers out there, Bullard and some other guy on the Fed, and said, oh, don't worry, the markets got ahead of themselves. 1%, we don't know about that, but we support a 75 basis points hike in July, this month. Maybe not the one. And so that's why markets heard that, and they went, yay, and moved higher and kind of rebounded. I think the NASDAQ was actually in the positive by the end of the day. And so that's where we're on that. We got retail sales tomorrow. Expect another sell-off if bad news happens. I'm sure somebody will manipulate something to run it back up, but we'll see. Okay, so just to let you know on that one. So what we're talking about here, just in a nutshell, I'm going to give you a picture of this, is what to look for in your own stocks, your own ETFs, and things like that to know if we are trying to bottom out here or is something else about to happen, okay? And so if you look at this, this is textbook what happens in most stocks and ETFs and things like that and indexes. So that's a stage one where it starts to consolidate. What you see to the left there is a stage four, which what we're in, basically most stocks are in now and have been in for a while. And then this is where we start to try to build out a base, a bottom, test it multiple times, and then move up to stage two, which is what everybody likes to be in. That's where stocks are moving up for long periods of time. And you see down here, this is called on balance volume. And you see the volume has changed, right? It's starting to arc upwards, and that's when you see stocks start to move. And the indicator you see at the bottom down there uses volume to basically show us which way the momentum is heading. Okay, so if it's heading down, you know momentum's heading down. When it swings up, momentum is changing, heading to the upside, okay? And it uses volume. You can Google how to calculate that if you want to, but I think you kind of get the gist of what I'm talking about. So, and that leads us into Arkk, because this one's been beat down, hammered, killed. It's all about risk, right? And so what do you see there? That looks like a stage one to me coming out of a stage four, at least attempting to build a stage one. And what do you see? It has absolutely tested that resistance level multiple times, but it's in that box since May. What do you see on the bottom? You see plain as day what's happening. Same as you saw in the picture. It is starting to shift. Momentum is moving upwards now. And that's what's happened with this. And so what we got to do is look over their top holdings to see how this happened, right? Because it's an ETF, holds a bunch of stocks. And when you look at their top holdings, you got Zoom, Roku, CRISPR, Teladocs, and some others we're going to look at. And I'll bet money they started this process before the ETF did. And by the way, if you get anything out of this, please hit that like and subscribe button for me. I really appreciate it. Think about sharing the video. As always, guys, thank you for all your support. And if you look, it started in March, actually, trying to form a stage one, because it had just been beaten down, what, 75-80%, if not more. And you see us testing that upper resistance line multiple times now. You see what's going on with the momentum. Boom, swinging up all the way. That started the momentum, actually flattened out, but then started to swing in May. And then you look at Roku. Same thing. Started this back in May. You can see plain as day what's trying to form. It's just like the textbook picture, right? See what's happening to the momentum down there. And when you look at CRISPR, this actually started there really in like January of this year, right? I mean, healthcare has been destroyed, but you see that momentum starting in March started to swing up. And look, these stocks, I forgot to mention, this one's been selling off since January of 2021. Most of these stocks have been selling off since the beginning of 2021, not in November like a lot of the other stocks. Look at Teladocs. This is what I mean. This is a perfect example. Look at this. Been selling off since February 2021, but look at this. This is what I say, attempting a stage one. You see right there, that was like a stage one to me, right? Tested the upper band multiple times. Look what happened. Earnings came out. Boom. Absolutely destroyed. And now what's happened since, what's that, April? It's been sitting here trying to form a stage one again. You see the momentum is shifting based on the volume once again. And then if we go over, you got path and this has been started since April, trying to build out a stage 1, tested the upper band multiple times. You see the momentum has been shifting upwards for this one. And then going into roadblocks, you can see the same thing, tested multiple times. Actually, like it's kind of broken above that. Momentum's different. And look, it actually started selling off in November with the rest of them, but it bottomed out and moved up very quick. See a major move in momentum there. And I think since it really bottomed out, you're looking at a 54% move up even after this recent pullback. And this is what you see. This is part of the process when you go into a bear market. You will have stocks like this, and you may think to yourself, they have no business, being in a phase 1, getting ready to try to move into a phase 2. But remember, these stocks have been selling off way longer than the other stocks on a lot of them, right? And eventually valuations get to a point where people say, when I say people, I mean institutions, we're willing to take a risk. And so they just start buying, and defending certain support levels. They just won't let it go below. And so that's where we're at on that. But, if you look back in 2008, when I looked at the NASDAQ, you can see the QQQ here on the daily, that's plain as day a phase 1, right? Coming out of a phase 4. You see the momentum starting to swing. It takes a long time, right, in these bear markets. But this is the weekly right here, and you can see I got the 40-week moving average up here, and it obviously moved way up by the time it crosses that 40-week moving average. It tested it not once but twice, but then you see a major move of 50% on the QQQ in less than a year right there. But, and the people who have fast forwarded are going to miss this point right here. When I looked at a lot of stocks, like if you look at Amazon back in the 08 crash, they would build out a phase 1. That's why I use the word attempting to, okay, because it failed a lot. They built out one. You look, oh, looks like we're bottom, getting ready to move, and then there was a major move down, a capitulation move, final flush out, whatever you want to call it, and then a V-shaped recovery. It just bottomed and took off and never looked back, okay? And so that's what you see in a lot of stocks. And so like Arkk, for example, you're gonna have earnings coming up here. We got a ton of macro headwinds going on. So a stock or an index or whatever can sit there and try to build out these phase 1s, and all of a sudden some bad news comes out, bad earnings hit, and then you get this major move down, the final flush out, which a lot of people are looking for, because we've never bottomed in a bear market that I can think of or anything I've read about without at least the VIX hitting 45 or above, right? And I don't think we've come over 40 in this bear market, if I'm not mistaken. And so again, that's what I'm saying when you see this. So if you're just wondering, wow, why has Arkk been moving up and everything's been moving down? Because the stocks within that ETF, before Arkk ETF started to move up, was trying to form a base, a phase 1 or a stage 1, whichever one term you want to use. And so that's what was happening, right? That's why it hasn't been volatilely moving down right now, because those big stocks that holds huge positions in won't let it, all right? Now, earnings coming up here, if earnings are bad, you could see a major flush out, major move down in the stocks, which of course will take the ETF with it, and we'll take the NASDAQ with it and all this other good stuff. That can happen. So that's something to look for. That's why it's a coin. That's why a lot of people say wait until it crosses either 40-week moving average or the 200 moving average, whichever one you like to use. Some people use a 30-week moving average. That confirms, they use that as confirmation, not as 100%. You need to use that and other things as well to see it. But if you see momentum moving, it's crossing one of those moving averages and stuff, odds are the trend is your friend. It's moving. Okay, we've kind of got past the bad stuff. None of that has happened yet, right? You see momentum swinging up, but you don't see any of them crossing those moving averages I talked about. And so that's what you got to look for, look into, look at your own stocks, see what you're seeing. But this earnings season is going to dictate to me all of that. You can try all you want to build out a stage 1, phase 1, whatever you want to call it. But if there's bad earnings, guess what? It's going down, okay? I mean, that's the way it is. And so far, earnings have not been that great. Got banks out there not doing well. Taiwan Semiconductor was actually pretty good, not bad. So I actually pulled up the semiconductors, so that was good. But everybody else, not so good. So, and the ones that are reporting decent earnings because they were able to pass on the cost, the extra cost to us, right? But they see a lot of headwinds still ahead. And if the consumer weakens, then they know they're in trouble. That's just the way it is. I mean, you saw one of the banks, with the JP Morgan, stop their share buyback. That's never a good sign. And one thing the banks are doing is they're stockpiling up money to try to head off what they've, and I'll try to put a video out on this as well, but they're already projecting defaults to start increasing, which makes sense, right? If the Fed is raising rates and we got all this inflation, guess what's going to happen eventually? People aren't going to be able to pay for their cars and the houses and the credit cards and all the stuff we run debt up on. You know, that's gonna be a problem. You know, it may not be a huge problem, but it's more of a problem than it was, right? And so that hurts their earnings as well. And so that's where we're at. Just want to put that out there for those who hung in there with me. If you got anything out of it, please hit the like and subscribe button. I really appreciate that, guys. Share the video. Always helps out the channel. And I'll see you guys later.